Hey everyone, and welcome to another deep dive. You guys sent in some really interesting stuff, and this one piqued my interest, I gotta admit. A bullish omen for the NASDAQ. I'm ready to dig into this one.
Yeah, it's a pretty compelling article, I'd say.
For sure. So, just so everyone's on the same page, we're looking at this article from mapsignals.com, written by Lucas Dioni, published just yesterday, December 12th, 2024, and the title is Another Bullish Omen is Flaring for the NASDAQ. Catchy, right?
Definitely grabs your attention.
It does. And basically, the article's all about how the NASDAQ performed in November and how that performance historically could mean good things for Q1 returns the following year.
Right, and the NASDAQ 100 is already up a pretty incredible 29.3% year to date. So if you're invested in the NASDAQ, or you may be thinking time to take some profit.
Oh, if I was, I'd definitely be tempted to cash out at least a little bit. But this article seems to suggest that might not be the smartest move.
Well, that's what the historical data points to. It's not just that November was a good month for the NASDAQ. The gains actually went above and beyond the average November return, going all the way back to 1995.
Interesting. So a strong November tends to set us up for a strong start to the new year. The article actually mentions this 6-month period from November to April where markets often do really well.
Yeah, that's where things get even more interesting. The cyclical pattern in the market. Well, historically speaking, the NASDAQ averages a 9% increase over those 6 months.
Wow. And the article actually says, remember to buy in November.
Catchy.
For sure. So a good November might lead to a good start to the year. But the article goes deeper. It says that strong Novembers like the one we just had often mean a really strong first quarter. They say when the NASDAQ gains 4% or more in November, the average Q1 return is 4.62%. That's kind of be statistically significant, right?
It is. That 4.62% actually represents a 47% outperformance compared to the average Q1 return over that same time frame.
Wow. So it's not just random chance. It seems like there's something to this pattern. But the article takes it a step further and links this bullish signal to institutional investment patterns. Over 21% of inflows since November have gone into tech stocks. That's huge. That's institutional investors like hedge funds, pension funds, right?
Exactly. Big money coming in from experienced players.
So these are people with resources and expertise. They're putting a lot of faith in the tech sector. That definitely supports the idea that the NASDAQ could keep growing. But it's not just about riding the wave of the whole tech sector, is it?
You got it. The author actually stresses the importance of finding what he calls all-star companies within tech. He even uses the analogy of a map to guide investors toward those standout performers.
Okay, so we've got these historical trends pointing to a potentially strong Q1, and we've got these institutional investors pouring money into tech. But how do we find those all-star companies?
That's the million-dollar question. And that's exactly what we're going to unpack next. We'll dive into how Map Signals approaches this challenge and how their methods might help us navigate this exciting but sometimes complex world of investing.
Okay, so we ended part one talking about finding those all-star companies.
Right, and that's where Map Signals really comes in. Their whole approach is about finding these outperforming stocks, and they do that by looking at what they call unusual institutional buying activity.
Okay, so it's about following the smart money. Those
Yeah.
big investors we were talking about.
Exactly. It's like trying to see where they're placing their bets.
Makes sense.
Mm-hmm.
But how do we tap into that knowledge as everyday investors? We don't have access to their trading desks or anything like that.
Right. That's where the map part comes in. They use these algorithms and data analysis to track these big investments, and it creates this kind of heat map of where the smart money is going. They're looking for stocks that are getting a surge in buying volume, but specifically from those institutional investors, the ones with a track record of making good calls.
So it's not just about following any big investment. It's about the source of that money.
Yeah.
Like if a hedge fund with a history of picking winners starts buying a lot of a stock, that's a bigger deal than if some random mutual fund does the same thing.
Exactly. It's all about the smart money. They factor in the reputation and the past performance of the institutions doing the buying.
So they're not just looking at the raw numbers. They're considering the experience and the expertise of the investors. Like, is Warren Buffett buying this stock? If so, maybe we should pay attention.
Yeah, that's the idea.
Because someone like Warren Buffett has a whole team of analysts. He's been doing this for decades. He's probably doing a lot more research than the average investor.
Exactly, and that's the logic behind it.
So it's like Map Signals is giving us a shortcut, letting us benefit from the research and analysis done by these institutions. But I'm curious, what are they actually looking for? What qualifies as this unusual buying activity?
Well, one thing they consider is the size of the investment. If a big institution suddenly starts buying tons of a certain stock, that's a potential signal. They also look at the consistency of the buying. Is it just one purchase? Or are multiple institutions all buying into the same stock at the same time?
Right. So it's not just one-off. It's
Oh,
a pattern of behavior across these big players.
exactly. And they also factor in the type of institution doing the buying. Some hedge funds, for instance, are known for being really aggressive with their growth strategies. If they're loading up on a stock, it might mean they expect the price to go way up soon.
So it's not just about the numbers. It's about understanding the players and their styles.
Right. You got to know who tends to make the right calls and what their overall approach is.
So this is all super interesting. But I imagine it's not as simple as just blindly following these signals. There's still got to be some personal judgment involved, right?
For sure. These signals can be useful, but they're not foolproof. You always got to do your own research before you invest in anything.
So map signals is kind of like the roadmap. But you still got to know how to drive.
Exactly.
You got to assess the risks, make sure the investment fits your goals and your risk tolerance.
Right. These signals are more like starting points. They're a reason to do more research and dig deeper.
Okay, so we've got this potential roadmap. But how do we apply it to the NASDAQ right now? We know there's a lot of institutional money flowing into tech. If someone wanted to follow the smart money, where should they be looking?
Well, there are a few really hot areas within tech right now. Things like artificial intelligence, cloud computing, cybersecurity, even the metaverse. Those areas are getting a lot of attention and investment.
So those are the places to look for those all-star companies, the ones that are innovating and growing really fast.
Yeah, those are definitely good places to start.
Okay, so you got to combine the big picture trends with the specific analysis of individual companies. It's not just about following the crowd. You got to look for the companies that are showing those signs of unusual institutional buying activity.
Right. You got to zoom in and zoom out.
This has been super insightful. But before we go too crazy chasing the next hot stock, I want to talk about something we mentioned earlier, the importance of long-term investing. It's easy to get caught up in the excitement of making quick money, but real wealth is built over time, right?
You're absolutely right. It's like the market is an ocean. It's always going up and down. You can't ride every wave.
Yeah.
You got to have a steady hand and a long-term vision.
So it's about being patient, letting your investments grow, riding out the ups and downs, focusing on the big picture.
Exactly. Don't panic sell when the market dips. Don't chase every new trend.
So you got to combine this knowledge of market trends and these smart money signals with a long-term perspective.
Exactly. It's a powerful combination.
This has been amazing. We've covered so much. This potential bullish omen for the NASDAQ, the whole world of institutional buying patterns, and the importance of long-term investing. But I want to hear your final thoughts. What are the most important takeaways for our listeners? What should they keep in mind as they navigate this crazy world of investing?
Well, at the end of the day, it's about being informed, right?
Yeah.
The more you know about how the market works, the better decisions you can make.
Yeah, it's not just about blindly throwing money at whatever stock is hot right now. It's about doing your research, understanding the fundamentals, and picking investments that actually make sense for you.
Exactly. And I think it's important to remember that these signals we've talked about, the NASDAQ's performance, the institutional buying, those are encouraging signs for sure, but they're not guarantees.
Right. Past performance doesn't guarantee future results.
Yeah.
The market is always going to be unpredictable.
Exactly. The only things that are certain are death taxes and market fluctuations.
So true.
But that uncertainty is also what makes investing so exciting. It's a challenge.
So it sounds like the key is to use these tools and this knowledge to approach investing strategically, not emotionally. Okay, so to sum it up, we've seen that the NASDAQ tends to do well after a strong November. And we've learned how to potentially spot winning companies by tracking those institutional investors. But maybe the biggest takeaway is that investing is a journey. It's not a get-rich-quick scheme.
Yeah, it's a long game. It's about learning and adapting and refining your strategy as you go.
And it's about finding what works for you, right? Your individual goals, your risk tolerance.
Exactly. Everyone's different. There's no one-size-fits-all approach.
So as we wrap up this deep dive, I want to leave our listeners with this thought. Don't be afraid to ask questions. Don't be afraid to learn. The more you know, the better off you'll be.
Couldn't agree more. The world of investing can seem intimidating, but it's also incredibly rewarding.
Absolutely.
So keep learning, keep exploring, and keep that long-term perspective in mind.
Great advice. Well, on that note, I want to thank you for joining me on this deep dive. It's been a fascinating conversation.
Likewise, it's always a pleasure.
And to our listeners out there, thank you so much for sharing this article with us. We hope you found this deep dive insightful and maybe even a little bit inspiring. Until next time, happy investing.